Welcome back. Oh, great real estate show today. Really some of the top people not only in the city, I would say in the world, without a doubt. They
How
are,
big is
man.
your world?
My world, if you've listened to Heather, my world is about Factoria to 85th, and I get to the stadium sometimes. And
that was an accurate statement.
yeah, it's a big one. In my world, there's no doubt. No, seriously, in pretty much the entire world, these guys are some of the best. In fact, Steve Curran was one of the youngest winners ever of Coldwell Banker's Bain Rookie of the Year award prior to joining NWG, and has been an annual recipient of Seattle Magazine's 5-Star Customer Service Award. Hi, Steve.
Hello, Ben.
Welcome back.
Well, thanks. Good to be here.
Yeah, how are things?
Things are good. No complaints other than the weather.
The weather. Oh, come on. Yeah. Okay, I'll run with that. Yeah,
There you go.
I think so too. Although we try not to talk about the weather. It's kind of small talk on the old radio.
Back to your world.
That's right. Back to my world. So, Steve, today there was a big report came out. Talk a little bit about your opinion of the National Association of Realtors, their opinions, and maybe what that means for our local market.
Well, a lot of what we've been talking about, whether it be, at the office, out in the car, out at open houses, is this is really going to be a year of confusion for a lot of people, especially relative to the headlines that you see. The NAR report this morning that said prices now on an annual basis have risen 10%, from, this April versus 2011. And then you even have the previous report just a few weeks ago regarding King County prices rising 9% month over month, 12% just in Seattle alone. And people are trying to say, wait a second, what does that mean? Did the value of my house really just rise 10% on an annual basis or 9% monthly? And the fact of the matter is no. Things are getting better.
Oh, we're so optimistic before you got here, Steve.
It's the weather's just coming down. But a lot of this just gets back to the way that these statistics are formulated. And I think if you step back to end of summer 2007, early 2008, when our market was really starting to pick up speed relative to the correction, I think that you can see in a way our prices, and even from a national standpoint, they've overshot to a degree the way that because so much of these median prices and so on, it's weighted by volume, and it's weighted by volume and price point. The majority of short sales and foreclosures nationwide are below 200,000. So all of a sudden, you get a monthly report come out where the percentage of bank-owned homes, made up less of the total sales, and all of a sudden it looks like prices have risen 10%.
So is this a media maker? Is this a headline maker?
It's definitely a headline grabber, just like the one in the Seattle Times a couple weeks ago. Prices up 9% month over month.
Always trying to sell newspapers, aren't they?
Yeah, it definitely it grabs eyeballs and it grabs attention and starts conversation. And what we're seeing on our end is it's just creating a lot of confusion for a lot of people. Buyers saying, wait a second, what does this mean for me? And other sellers then saying, wait a second, what does this mean for me? Are things really getting that much better dramatically? Is this a V bottom? Are things snapping back?
What does it mean for buyers right now in this market?
What it means is there's going to be still more competition, in terms of there are more and more buyers that are all coming off the sidelines together. Confidence is starting to build upon itself. That you had a period in 08, 09, early 2010 where buyers would have a wish list of, say, 5 homes that they really liked, and they may or may not have been ranked in a 1 through 5 order, and they would just sit and watch, and those homes would sit, maybe one would sell, but 2 or 3 would have a price reduction. They just would sit and watch. Prices continued to fall. Those homes would never disappear. Now they generate that same wish list of 5 homes they're keeping an eye on. 2 of them sell in the first 7 to 10 days. 2 more sell fairly quickly, and then it's there's some degree of discomfort that they're feeling in terms of seeing things start to move at a little bit brisker pace. We're starting to get back a little bit more of that. New listing comes on at 4:30 in the afternoon. Hey, can I see it tonight? Don't want to wait till tomorrow. Type of thing. So it's adding a little bit of that confusion, a little bit of that concern that the market's starting to drift upward, and they're worried about, everybody sat and said, well, I want to buy the bottom. I want to buy the bottom when things are, at their lowest point. But, I think we would all concede that nobody knew exactly what it was going to look like, and it wasn't like it was going to be a singular event where someone was going to ring a bell and say, okay, now prices are rising again, that it just, if this rally that we've had relative to local prices acting better, the national economy, things being modestly better, albeit not great, that, if this does hold, then it does look like, a lot of the bottom in this market was 6 to 12 months ago.
So when people are out, they're looking at houses. The houses are disappearing. Well, they're not disappearing. They're selling. As far as I know, no magic
they're
going on.
disappearing to other owners.
They're
not falling off
They're
a
disappearing
cliff,
off of the websites that say they're for sale.
Yeah.
And, as these houses, as they start to go, as they start to sell, as I said in my monologue, it starts to create we see it starts to create a little panic.
Yeah.
And now all of a sudden people just they're more willing to go, okay, I'll look at it once and I'll buy it.
We've had about a 6 to 8 week period where I think you could even call it a mini frenzy a little bit. And we've even likened it more to a buyer's panic, to where all of a sudden they've been saying, oh my gosh, the best ones are getting snapped up. I don't want to be the last one. You think of it with the day after Thanksgiving sale where every parent's, barging in the Walmart, shelf at 4 a.m. and nobody wants to be the one left without the bazooka G.I. Joe toy. And it's that.
Was that the big one this year?
Evidently, I don't know, I missed out. But
I always think Tickle Me Elmo was like the real big one back in the day. We just got one of those for our kid, and they're funny, man.
Yeah. But so you're seeing a little bit of that from the standpoint of that mentality that people are seeing, and it's that confidence. They're seeing other people. There's several of the local companies that that have been hiring and bringing in more people, and their share prices in particular have been doing well, and confidence is higher. And I think you're seeing more and more people from those companies. The chatter around the water cooler isn't sitting and waiting to try to buy a short sale. Now it's, well, we closed on a home 2 weeks ago. It's that confidence grows. Just as it disappeared overnight, confidence is starting to grow, and it's people feel it's safety in numbers. They want to do what other people are doing, no matter what it is. They don't want to be the only one going against the trend.
Well, and remember back in, 2007, nobody wanted to be the one who would never be able to buy a house because they were going to get priced out. So you kind of get these two motivating factors at opposite ends of the spectrum.
The frustrating standpoint from the professional's point of view is we've had this all or nothing market. Things have been great, things have been terrible, and now all of a sudden there's activity again where it feels like we've had about 3 years worth of activity compressed into the last 6 to 8 weeks. And, I think what would be good if things normalized a bit, I think it'd be good for both buyers, sellers, people in the industry as well. I think people would be able to make more sound decisions. People are back to having to make some pretty quick decisions, quicker than they may like, and I think some sellers and some listing brokers are back to trying to use that leverage, whether it's waiting to review offers, asking people to, have pre-inspections, various things like that. And it's, we need to get back to a place where it's a little bit more healthy, where there's a little bit for buyers and sellers, where it isn't just where one side has all of the power. Because as we've seen both on the way up and then on the way down, neither party acts good to the other party when they have all the leverage. We're here with Steve Curran, East Side Director with NWG Real Estate. Steve, we have just a couple minutes before we have to go to break. But, you talk about this when it gets balanced. What's it going to take to get more balance? Is it higher prices? Is it more inventory? Is it a combination of both? I think it's going to be a combination of both, and I think higher interest rates a little bit too. That, part of the challenge is, since the Fed has really been on their interest rate campaign that they have been, which is going on a significant period of time, we have a market from an interest rate standpoint, and I'll let you guys, the experts, touch on that more, but it's been manipulated to the point where I think we've sort of lost sense of what normal is, to where, you look at anybody that's 35 or younger right now and they think sub 5% interest rates are a birthright. And you look at now, people think that adjustments in home prices up or down 1% to 2% a month is normal, when you had a 70-year period when that was darn near what the annual rate was. That it's just, I think so. Everybody's still, I think, trying to grasp their sense of what normalcy is and trying to figure it out. And that's part of the problem with, headlines like we just had in the Seattle Times or even this report. It's, these numbers just end up, there's so much information and they almost just end up confusing people even more. Well, Steve, we have to go to break, but stick around to the end of the hour, because I want to talk more about what you said, the year of confusion, and maybe try to straighten some of that out, or at least maybe try to understand why people are so confused, or why they will be if they're not already. When we come back, Kendra Todd's going to join us. Now, Kendra does know quite a bit about real estate, but she also knows what's going to be coming on the market soon, because
unlike most people, she's kind of got this direct connection to some of the biggest people out there that know about housing. We'll be right back after this break. You're listening to Brashenomics.